The Taiwanese index is up around 0.2%.
Rate cuts and a soft landing are increasingly in the forecast, and so is S&P 5,000.
The recent low, which the market has respected, if we get a close below it, I think that'll be the first kind of signals.
So there was no other such incident in any other branch. This was a very isolated incident at one of the specific branches of Ambala.
A growth of between 25 and 30% in terms of AUM is achievable.
20,900, 20,923, which is a gain of 20 points.
I think in about 3 years' time, India will be the third largest GDP.
FY23 was a result of much of the pent-up demand in the market.
Whether this has any impact on the overall demand of the product or consumption of the product, absolutely not.
The Nifty went down to levels of 20,801.
It is the first time that fossil fuel has been mentioned in any agreement when it comes to any of the COP. Bank Nifty did see some recovery, but it has come off from those levels as well.
Well, that is the day so far. You're with us here on Closing Bell. We're coming to you from the CNBC-TV18 News studios. Last hour coming up, market refusing to stay down, at least not in any meaningful way. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, afternoon.
Hi, afternoon. That's been the story in the second half, right?
Sure.
The recovery across indices.
I mean, and as I was walking in, I thought the market would flip into the green, which has not happened. Yeah. There's still, I think, about 30-odd point cut there, but it's a big improvement, big improvement from where we began the day, or actually where we were mid-session. Actually, just a few things. The Nifty is back above the 2850 level, as we were highlighting earlier, just marginally above it. So there's still 60 minutes to go and things will move. But for now, we've reclaimed 2850. We broke it intraday. Bank Nifty, even at the day's low, and the Nifty Bank has recovered 0.5% from the day's low, but it did not break the 46,852 level, which is nothing but the 40-hour exponential average as of yesterday's close. And we're about 50 points, actually now 100 points above that particular level. Broader markets are doing well, 0.5%, 0.75% gain, so no real problem. Market breadth had flipped into the negative, but it is back in the green. And of course, the Fed meeting tonight and what Fed Chair Powell says, I think will hold a fair bit of importance and something we will discuss with our guests here over the next 60-odd minutes or so. Reema.
Hi, and this time he's going to issue the dot plot too. So it's not just going to be the commentary from Jerome Powell, but the street will parse for any dovish tilt. Are there any indications of potential rate cuts, which the market is pricing in 2024? But for our own markets, the low on the Nifty was 20,769. From that level, it's an exactly 100-point recovery that we've seen, 114 points to be precise on the Nifty. The mid-caps have managed to get back into the green, and the advanced decline ratio too is now nicely skewed in favor of the advancing side. That's the recovery on the mid-cap index, 300 points from the lows, but currently it's up 0.5% in terms of the index level. IT is down and out. TCS and Infosys have a cut of more than about 2%. Talking about the stocks which are leading the recovery or where we have seen an up move in the last 1 hour, pull up a Nestle, that intraday chart, or pull up something like a Larsen & Toubro. These are stocks where you are seeing some buying. Other than that, the gainers from morning have been Hero MotoCorp and NTPC. In fact, bar is a big theme, right? In the large cap space, it's NTPC, but IREDA, 75% up move in the last 4 trading sessions. PFC, REC have gone on to hit fresh highs today with a 6-7% gain.
Well, that's right. You know, Reema, with regard to PFC, exactly 1 year ago, we here on CNBC-TV18 had explained the company. We said it's an indirect way to play the reforms that have been taken by the central government with regard to the power sector. So the stock was at half-time price to book at that point of time. It's re-rated from then. And what happened in the last few weeks, after it doubled as well, you had IREDA that came out with this issue. So that's why there are comparisons being drawn out there. Now, obviously, the loan book is very, very different out there because IREDA is totally into renewables, while they have a smaller proportion out there. But the stock has seen a big move. It's up close to it's up more than 3 times in this year itself. That's the kind of re-rating you've seen on PFC. You pull up a year to date, you'll see the way the stock has moved. We had put out a piece, I think, on December 26th. And from there, in fact, you're not seeing a big move. No, don't pull that one up. That's a wrong stock that we're putting up. And actually, some of these other stocks as well that have been moving in the last 1 hour or so. Vedanta is moving up. There is hope that maybe, in fact, Mr. Anil Agarwal could be looking at refinancing some of that debt. So that explains why that stock as well has moved up. And VIP, a rank underperformer, well, that one as well has seen a big up move in today's trading session. Maybe the street believes Safari has seen a big up move, but everything is good at a price. So maybe, in fact, some part of the street believes that VIP as well is moving up, though channel checks indicate to various brokerages that, in fact, they still continue to lose market share. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar is back with us to help us out with how do you trade the Nifty from here on. Hi, Mitesh. I don't know whether this is the last buying opportunity for December, because we were down close to 100 points today, 130 points, I think, at the low point of the day. And today, if the Fed doesn't disappoint, maybe, in fact, those higher levels are on the cards. What's your take with regard to the Nifty first?
Hi, Nigel. Good afternoon. So I think, I've been, stressing on this point that the markets have rallied strongly, and last few days we are just consolidating. We're actually not even giving up or entering any kind of corrective mode. So it is a good thing. You are at new highs. You're trying to build a fresh base. I think this process, even if it takes a few more days, as long as we don't see a signal of a breakdown, I think this will mean that we'll definitely make much higher highs from here. So I would maintain a positive bias. I think as long as the Nifty, does not start breaking below 20,700, 20,700 is the first support level, but the bigger reversal will happen only if we break 20,400, 500 zones. And I don't think that's happening looking at the indicator setup on the daily, weekly, and the short-term charts. So stay positive. Let this consolidation play out. Try to buy closer to 2,700. That's the first support area. And I think I would, in the next up move, believe that 21,000 will be captured decisively, and we might head towards 21,500, 550 zones, even 22,000. So just trade with the long bias and let this consolidation play out, and look for stock-specific trades till then. On the stock side, I have a buy on Colgate-Palmolive, making a fresh high. Keep a stop at about levels of 23.40. Look for targets of 24.25. And GIPCL cash stock, because it's the broader market doing very well. So GIPCL is a buy with a stop at 180 for targets of 200.
Thank you very much for that. Those are some trading ideas. The bias remains long for the markets, though we could enter a period of consolidation. Let's talk about PI Industries. Yesterday, the stock was down 10%, and today too, despite management commentary trying to reassure the street, the stock is still down close to about 2%. Just in case you missed it, yesterday, one of its Chinese competitor has announced a very large capex of 2,000 crore for one particular product called pyroxosulfone, which is a key product for PI Industry, and reports suggest it contributes about 35-40% to its top line. So the street was worried about competitive intensity and the impact it will have on its market share. So the stock fell. But today we chatted with the management and listened to what they had to say. And Sonal joins in with the key takeaways from that interview. Sonal.
Thank you so much for that. Well, the stock was under pressure yesterday, today as well as down around 2.5% on the news update that a big Chinese player, that is Rainbow Agro, has entered pyroxosulfone market, which is a big product for PI Industries with a 2,000-ton capacity. And it is a crop protection company. And not only that, there are a lot of Chinese companies which are eyeing this market, which has been growing very well. On the back of which stock fell yesterday, brokerages wrote on the stock today. MOSL, for instance, said that global demand for pyroxosulfone has been robust, and it is one of the key factors which led to PI Industries' growth over the last couple of quarters. And PI Industries has outperformed the agrochemical industry despite the headwinds that this particular segment is seeing. This was led by this particular product. This is the third Chinese company announcing a capacity, and this could have a negative impact on PI's exports. Additionally, one of the big customers for PI Industries also indicated that there are some inventory headwinds, and that also could see some pressure on demand. Novama said that it has been facing a risk of product going off patent in key markets in the US. Product contributes around 56% to their export revenues, around 35% to their overall revenues, and it will have an impact on margins and earnings due to significant dependency on a single product, and will continue to be an overhang. However, we spoke exclusively to the management earlier today, and he did indicate that pyroxosulfone market is huge, around $600 to $700 million, and they see a potential of a multi-billion-dollar market here. They are not seeing any mid-term or long-term threat for innovators despite entrance of a lot of these generic players. In most of the markets, this molecule is protected under various patents for several years. So even if a new entrant comes, it will not have such a big impact. They say their portfolio is very diversified on concentration risk, that when we asked them, they said they are constantly introducing new products. They also bought a pharma company to expand their pharma portfolio, and that's the reason they will reduce their concentration substantially in coming years as well. Also maintain 18 to 20% growth that they had indicated earlier. So they cleared the air around it, and they say they're confident of maintaining their growth targets.
Regarding whether these capacity announcements or some of these generic companies getting into this molecule has any serious threat innovator or the existing manufacturer? Absolutely not. And I tell you why. Because in most of the developed markets where this molecule is being selling and which are the major markets for this product also, such as US, Brazil, Japan, and some other countries, these markets are protected. Data protection is there. That given the diversification, not from today or last year, but for last several years, this concentration, what it was 3 years back, 5 years back, what it is today, in coming years, it will be significantly lower as the many new products and many existing products are also scaling up. This year, we had indicated in our last call as well 18 to 20% growth guideline, and we maintain that guideline.
Okay, well, that's PI Industries and the story playing out. Prakash Dewan is with us now on the program. Prakash, good afternoon. Good to have you with us here on this edition of Closing Bell. Market is slipping again. I mean, not much, but 40 points lower in the day. PI Industries, Prakash, it's a quality name, high quality name. A sharp sell-off over the last 2 days. I mean, actually, largely yesterday. What would you do with this?
Good afternoon, Prashant. So I think it's an unfortunate accident. This was not something which was being built in. And because it's kind of come in as a little bit of a surprise, and it could have a dent in the company's, not just the revenue, ability to grow revenue at the targeted rate, but also, its ability to scale up, using this revenue and profitability on the other ventures other verticals that they are expanding. Now, given that, let's face it that PI industry is not expensive, and after this 10% fall and today's, little bit of a shave off, it's actually back to what it was about a year back, if I remember correctly. I remember it was in the same, neighborhood of 3,500. Now, if that's the case, and if you really want to bet on the quality of management, the quality of business, it's a business that does about 18%, 20% PAT margins, Prashant. And progressively, they've been, even after the pandemic, they've been kind of scaling up on revenue. So I would go with what the management is talking about in terms of being able to offset any kind of a slowdown that might happen because of this, the competitive intensity. But they've got other, levers which they could work on. It might take time. It's not going to happen immediately. But I would not lose the faith. And actually, it could be a buying opportunity at 34, 35 times trailing P. The stock is actually in one of those lower bands historically, if you see. So chemical is going through a little bit of a bottoming out phase. And whenever things look up, it will also start getting re-rated, and I'm sure the business will have enough triggers to support that. So I would believe it's a good opportunity for people to buy in.
Okay, all right. Prakash, I want your view on NMDC as well. So let's run you through first the reason that the stock is up. Motilal Oswal, they have come out with the note. They have a buy rating with a target price of 210 rupees. They believe the company is placed very, very well. There's robust demand, the capacity additions as well coming in stream, and iron ore prices as well. They've already taken a couple of price increases for this quarter, so that will start showing up in quarter 3 as well as in quarter 4. Production numbers they have given us, for this year, they're talking about 46 million tons odd. Year to date, they're already at around 27 million tons. They're up by close to around 17%. For the next year, the management is talking about 50 million tons. Motilal believes they can very well go ahead and outbeat that number as well. So that's going to be very, very important because demand is strong. Evacuation is something that they've been working on, and also they're getting capacity expansions as well. They've got the green signal with regard to additional capacities coming in parts of Karnataka as well as in Chhattisgarh. Valuation-wise, they believe it's fair. 5 times EV upon EBITDA, 1.6 times in terms of price to book. The key risk is, though, that 110 iron ore blocks have been auctioned in the last 7 years or so. And out of that, only 30 are operational. So if all the captive mines, they get operational, then it will increase supply. And if it increases supply, then that's what could put some kind of pressure on domestic prices. For the time being, though, they're quite optimistic on the stock. Explains why the stock is up close to around 5% odd. Prakash, what's your view? At around 190 rupees odd, I recall, close to around 15, 18 months ago, we had chatted about this piece when NMDC had NMDC steel as well in there. If you bought it at that 130 odd, you would be having a stock of 190 rupees, plus you'd be having the steel stock, which is roughly around 40 rupees. So it would have been pretty good investment. But at current reckoning, what would it be at around 190 rupees? What's your call?
Absolutely, Nigel, you nailed it. It's, the best part of this change that is happening in the iron ore side, and then particularly for NMDC, given the fact that it straddles with the, almost like 62% of India's ore capacity. The steel demand that we are seeing and the kind of revving up on scale that most of the larger players have got into has, of course, been priced into the ore companies as well. I mean, you could look at even the smaller ones, the ones that have captive ore mines. So all of that's kind of built in. From here, if you ask me, it probably grow at an organic pace of about 10-15% year on year for the next few years. But whether the stock is exciting enough at 190, my answer is not really. I mean, I would only buy it if there is some significant value available. And remember, these are cyclical businesses which can get hit with any kind of an impact that happens globally on the macro side also. So their vulnerability to macro changes is far more than the micro improvement that we are seeing. So I would probably look at something else. If you want to look at mining as a sector, which seems quite promising though, you could look at Moil. I mean, the product that they have, the kind of output that they're doing what NMDC did about 2 years back, if you really ask me. You look at the language, the body language, you look at the communication that's coming out of Moil, it's very similar to the transformative phase that NMDC went. Of course, you can't compare them in terms of scale and all, but it's a similar change. People get inspired. These are public sector businesses that seek information, input, insight, and inspiration from whatever is working for the other larger players. And from that perspective, I think Moil still has a lot of reset that's available on the PE multiple expansion side. And then, of course, the EPS will have to start kind of coming and incorporating.
Okay, Moil over NMDC. By the way, some real estate companies are selling off. So Sobha Developers and Indiabulls Real Estate, both of them have taken a knock of close to about 4.5% today. So there is weakness there. And Paytm continues to slide. Just a month and a half back, Paytm was headed towards a 4-digit stock. 998 is the 52-week high on Paytm. And from that level today, we're down to 600 rupees, a 40% fall in a span of close to about 1.5 months. And a lot of it coming through just in the last, 1 week. After that, the company going slow on the low-ticket loans. We'll slip into a very short break. Prakash, to stay on the other side, Shiv Sehgal, President and Head at Nuvama, will join in. Stay tuned.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. One of the big movers of the day today is Tanla Platforms. The stock is up 17% and it's moved up on very, very large volumes. So we've not quite managed to find out the reason behind this kind of an up move. Yesterday, the management did speak at an Elara conference, Next Gen Tech conference, but it doesn't appear that they've spoken anything which could be market moving. One explanation could be that the stock really hasn't done too much. If you pull up a 3-month chart of Tanla Platforms, you would see that the stock has been quite flat. So at a time when most of the mid-cap stocks have done well, there you have the 3-month chart. In fact, from its, the levels that it was sometime in October, the stock is lower today. So one explanation could be just a bit of a catch-up rally. And plus, its 52-week high is much higher at levels of about 1,317 that it hit in July of 2023. As I said, we've not managed to find out what explains this kind of an up move on large volumes, but some things to track when the company reports their Q3 numbers. The company had guided that Q3 is going to be a good quarter for the company because there was a price increase that the company had taken a couple of months back. In quarter 2, they got a 2-month benefit, and this quarter will have a 3-month benefit of the price increase. But you know what happened last time when there was a price increase? Their volumes had compressed. So you need to keep your eye on the volume performance, even though the top line could see a benefit on account of a price increase. Margins they had guided for to be range bound at Q2 levels, and they'd also spoken about they have an anti-phishing ATP product called Wisely ATP, and they were in discussions with many commercial banks to roll out this Wisely ATP. So we have to wait by for any kind of a deal announcement if it comes through on that particular product. So that's Tanla Platforms for you. Another stock that we're tracking very closely, and it's adding to the spate of PE exits via block deals. CNBC-TV18 has learned that Fusion Microfinance shares could be on the offer soon. Nisha is here with exclusive details. Nisha.
That's right. It's been a year of many block deals and private equity exits, and sources with direct knowledge tell us that bulge bracket private equity firm Warburg Pincus is looking to partially exit its position in the microfinance company Fusion Microfinance. We do gather that shares worth up to 1,000 crore rupees could be sold, which is roughly around 18% stake of the company Fusion Microfinance. But it all depends on the kind of demand that is seen for the shares of Fusion Microfinance, and for that the investment banks have been hired to really build the book, and also the market conditions will define how much stake is really sold down. What we do gather is that Warburg Pincus could be looking at paring down stake. Remember, it has about 39% stake currently. It is the first microfinance investment way back in 2018 that Warburg Pincus had made, and after that the company listed. We reached out to both the companies, and Warburg Pincus said no comment, while Fusion Microfinance has not commented on our query. But one must also note that Warburg Pincus just last week had sold shares worth about 5,000 crore rupees in 3 of its portfolio companies, CAMS, Bharti Airtel, as well as IDFC First Bank.
Thanks a lot for that, Nisha. Well, Prakash Diwan is still with us. Prakash, I wanted your view on this GMR group of companies. GMR Airports post that GQG block that's moving higher. Even as we speak, it's at the high point of the day. There was a large trade that took place earlier today, so we'll have to see who are the parties. But I recall earlier this week you said you rather go with GMR Urban, I think, Power and Urban Infra. And that one as well is moving very, very well. In fact, now it's locked in upper circuit. Your preference still remains with that one. And what's your view on both these two stocks from here?
So, Nigel, interestingly, we spoke about this. Prashant had asked me in the pre-open on Monday morning, and I had no idea why, GMR Urban was kind of ignored all this time, and they have actually been the one announcing so many changes, right from starting off with the debt repayment that they did in March. Then you had the GMR Energy consolidation into this balance sheet. So there are lots of triggers, and some of the assets that they have, Varora and some of the hydropower assets that they are working at very high efficiency levels. So all that which damaged the company's performance in the past 3 years is actually seeing a significant change and repair. Now, come March 24, what will happen is the balance sheet will look much more cleaner, leaner, and the ability to be able to start doing other things like metering and all, which you spoke about some time back. And that's possibly where the fundraise is also going to accelerate the process, right? So I think it's got all the engines finally firing on all, the engines firing on all cylinders. The airport business will take some time as it kind of starts maturing in some of the assets like Goa and Hyderabad and all. So it's still a bit early, but I think that's happened because the floats got absorbed and you have some marquee names to back it up and all. But I would still believe GMR Power and Urban Infra would probably still have some sort of a resetting in terms of its the kind of expectations built around it, and the performance will also start justifying that. So yes, I'm still positive, but of course it's moved 10% from the last time we spoke about it, so you need to factor that in as well.
Okay, Prakash, thank you very much for joining in. Block deal seen in ports and even in GMR Airports and GMR Power today. Shiv Sehgal, President and Head at Nuvama, is now with us on the show. Shiv, afternoon, and thanks for joining in. This is Rima here. While the Indian markets may be in an uptrend with the medium term, long term, but just looking at the near term, are you getting a sense that we are a bit overbought? And would you position your portfolio?
Hi, Rima. Thanks for inviting me, by the way. So I think, before I answer that question, let's have a look at what's happened in the last couple of weeks, right? Which is October end, we were looking at 10-year Fed yields at almost at 5%. And, Nifty was hovering around 18,800. Since then, if you look at November, mostly all markets have had a phenomenal rally, and that's on the back of the financial conditions easing off. The yields in the US came back from almost 5% to 4.2% as we speak today. And then, of course, what's transpiring now is that we are going to go into a lean period into the next sessions going into December before year end. I think your question is very valid. I think that some consolidation is on the cards, and I think bulk of the large bulge bracket institutions will probably take December and season holidays as well. So you're going to go into a lean period where I don't think much activity will start happening from next Monday onwards. Of course, for the rest of the week, we have the Fed and the ECB. Which will be very key important data points and what they say. But at the moment, I do feel that, we are going into a lean period. But even having said that, I think from an India perspective, we have historically seen that domestic flows are so strong, we could still see a ramp up going into year-end rally as well.
Hi, Shiv. Good afternoon, Nigel on this side. But what would your preference be, Shiv? If I pull up a year-to-date chart of the Nifty and say the small cap index or even the mid cap index, the Nifty is ranked third, in comparison to both these two. And it's a far third, there's a considerable distance between the two. From here on, if you're putting extra money from here on, where would the allocation be? Would it be more towards the large cap names? Or do you think there's still plenty of value in the mid caps?
So, Nigel, I think that's one of the predominant questions being asked by almost everyone, given the, rally that we have seen in the mid cap and the small cap space. There is no doubt that the Nifty and large caps have lagged. But in any equity bull market, especially in a country like India, EM like India, that was bound to be. And we also came off a very low base from 2018 to 2022. I think the mid caps had been, probably been out of favor. There was a massive rotation back into that space. And at the moment, it feels that it's a bit euphoric. But having said that, we are still finding, at Nuvama, a lot of jewels with the right strategies, the right management, unloved jewels out there. And, what has happened is, which we must realize is that, relative normalcy has come back post the COVID era distortions, right? And, I think those distortions are finally wrung out. And while the pace of the process globally may have been not proceeding as quickly, in India, we have seen a massive normalcy come back with a bang, right? And I think that's also helping corporate profitability across sectors. And, that is reflecting back into flows and momentum. And, I don't feel that you will probably see the entire index in the small and mid cap space continue to rally with the pace that we have just seen. But there are certain alpha stocks that will continue to do well because the equity bull market in India remains intact. I definitely feel some rotation back into the large caps is warranted, because what happens is, just recently in the last 2-3 weeks, we've seen the foreign flows come back and turn positive. I think between now and into financial year India, I think the foreign flows will remain very, very robust. And I do feel that a bulk of that, by natural inclination, they will gravitate towards the large caps because they can put, large sizes to work there.
You know, just want to once again highlight what's happening with GMR Airports, GMR Infra basically. It's a massive move, 8%. I think we highlighted that 0.5% block changed hands earlier. And of course, I mean, on last Friday, there was that large block where, you know, a lot of large investors, including GQG, as we had reported, came in. But look at that. It's a massive move, 77.5 on GMR Airports. Look at Indigo as well. You know, it's the aviation, the basic underlying thesis, apart from all the technical stuff, is, of course, the fact that aviation as a market is booming and there are very few ways to play it. Interglobe is one, but airports is another. So you're not betting on A or B airline, you're just betting on the passengers showing up. And, well, that's been absolutely, you know, phenomenal numbers there. Shiv, hi, good afternoon. You know, I was looking at this report from Novama, Emerging Ideas Conference, which, you know, the report came out, I think, the 9th of December. And there are two lists here. One is, you know, larger companies, and the other one is, you know, the smaller companies. The smaller companies is what really caught my eye. Lots of names here. You know, Beta Drugs, Brand Concepts, Creative Graphic Solution. I think many of these are in the SME category as well, if I'm not mistaken. Just talk about this segment and what kind of ideas. I mean, this is very, very stock specific, obviously. You can't make a generalized comment. But just talk to us about this.
No, Prashant, well noted, well highlighted. And I think, as I was telling Nigel, you know, there is no doubt that, you know, India is a very large economy. There are so many you know, I would say jewels out there that the market has not been privy to. And a lot of these companies are in the mid and small cap space, right? I mean, they have not been marketed. Nobody knows where they exist, but they're still putting up phenomenal numbers. Our idea at Novama is to go and find them, put it out, you know, to the investing public, and talk about, you know, some of the good stuff that's happening. You know, not in the predominant Nifty 50 names, but not even in the NSE 100. But, you know, in the bottom of the periphery where we feel a lot of action is happening, and they're coming at such a low base that incremental order wins, incremental flow that they are seeing can have a massive impact on the bottom line, because they are also having a massive operating leverage, right? And as and when they find momentum within that space, you know, there is a little bit of I would say a FOMO in the SME and the mid and small cap space at the moment, because, you know, that space has been rallying for almost 9 months. But having said that, you're absolutely right. There is a lot of demand coming from real institutional family offices, HNIs, institutions as well within that space, who are finding that, you know what, every large cap in some of the large caps today are all, you know, in the mid cap space, and they're multi-baggers, and they've done so well with their management and corporate governance that the next leg that will become the multi-baggers over the next 5-10 years, as we talk about the India structural bull story, I think, you know, that's where the space you will find, you know, a lot of interest, because people want to find the next, you know, the Tata Technologies or the next Novama, for that matter. We have become a listed company as well. And, you know, I think that space is growing, you know, and we are a large economy. We are seeing so many IPOs coming in. You know, we have not even talked about the fact that you've seen, you know, on average IPO was up 50-60% over the last 10 days. Right, and there's a lot of flow of momentum coming, a lot of blocks happening. It's a function of both things, both domestic money that we have constantly been talking about, you know, SIP flow, but also the foreign flow that has started to emerge, come back into India. And if, you know, the Fed talks about cutting rates, which is definitely on the cards, and there's a high probability, I think EMs in particular will do well, and India stands out in that region. You know, 93% of FPI flow into the Asia emerging markets has been in India this year. We have got 16.5 billion. You guys have talked about it as well. And that's a reflection of what's happening on the ground across the country, right? And I've been structurally bullish. I've been talked about that in the past as well. And I remain very constructive going into the new year as well.
Just to get the number right, 93% of the Asia ex-Japan FPI flows have come to India this year?
Yes, that's correct. Okay. So India and Korea are the two positives, and India has seen 16.5 billion.
Got it. Thank you very much for joining in.
Shiv, thanks very much. By the way, the Novama stock is also up 7-8% as we speak. So as you said, you're listed now. Thanks very much for joining us, and good to speak with you. By the way, the Nifty is turned green. That's another, just FYI, we're up about 4 points or so. So as we were coming into the 230 show, the index was had recovered, then it sold off about 40-45 points, and now as we, I think, approach the last 25 minutes. We are back in the green here. Just look at the Nifty Bank, which is slightly in the red. I mean, but of course, there's a 0.5% plus kind of recovery from the day's low on the Nifty Bank as well. There you go, 0.4% recovery from the Nifty Bank. And market breadth, etc. I mean, that flipped around into the green earlier. So there has not been very much by way of trouble at all. We'll take a very quick commercial break here. A D-Street chatter with Nimesh coming up in just a bit. And of course, our short-term technical trading ideas lined up as well. Stay with us.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. Just take a look at the Concor stock. Big spike is what we have seen in the last few minutes. So the stock was in the red and that one has moved into the green and big volumes you're seeing on that one. And as we told you at the start of the show as well, the street is hoping that something could come out with regard to Vedanta. The hope has been for the last few weeks or so, but now it appears that the street believes that an announcement with regard to some kind of relief to the promoter entity, that Vedanta Resources, could be on the cards. So explain why that stock has moved up as well. We'll try to get you more on that. Well, Nimesh is joining us to fill us in with what's going on in terms of D-Street action. Nimesh.
Hi, Nigel. A good recovery from intraday lows, but again, from a flow perspective, it's quite mixed. The volumes are on the higher side, but it's basically on both sides. There are buy sells. Equally, there are buys and there are sells as well. But I guess the leadership is clearly with the PSU stocks. The 5 stocks, the top 5 FNO gainers are all PSU stocks. And even outside the top 5 gainers, there is a lot of buying interest in the PSU bank names. So a lot of the PSU bank stocks have also recovered from the intraday lows and are at days high, largely on back of strong buying interest. So that explains the move in the PSU bank stocks today. Apart from that, I guess even in the broader market, the momentum continues. There is a lot of retail and HNI money chasing the mid-cap names, so that continues to outperform. But I guess the leadership is clearly with the PSUs, and that is one space which is outperforming in terms of flows as well.
Nimish, in terms of individual names, what's on the list?
Well, so the first name on my list today is Mangalore Chemical. That's been consolidating in a very narrow range. The city is now anticipating some sort of a corporate development very soon, so that is something to track in Mangalore Chemicals. The second name is HDFC Bank. There's going to be a large inflow in HDFC Bank because of the FTSE rebalancing on Friday. The stock has been doing well in the last many days. There will be buying as well, but all eyes will be on the FTSE rebalancing on Friday because IFL note suggests that there will be an inflow of $450 million in HDFC Bank on that day. The third name is Karnataka Bank. As I explained, all the bank stocks are buzzing in trade. Karnataka Bank stands out, big volumes on that stock as well, buzzing in trade. Looks like some bit of HNI interest is back in that stock as well. I guess the management is on a roadshow of late, and the city is now anticipating a QIP very soon in Karnataka Bank, so that's the buzz there. And the last one is Apollo Tyres, part of my charter list in the last few days. It's come again in the list today. The stock in a good days is under pressure, largely in anticipation of a large block deal. So remember, we highlighted that the PE investor Warburg is looking to sell a lot of its stake. So looks like a large block in Apollo is around the corner and can come very soon.
Nimish, we were joking earlier, the market is abuzz with all kinds of, as they call it, chatter. And we only present, Nimish presents a sliver of what he picks up. He works the phones through the course of the day and then kind of shortlists the list down to 4 or 5 credible things that he's been able to back up with secondary confirmation, etc. But he only presents a sliver of what is out there. So, market as active as ever, Nimish, right?
Yeah, absolutely. In fact, Prashant, this is the time when it becomes even more difficult to put out this chatter because there is so much of news. Everybody's got every news. The stocks are also reacting. Stocks are moving up as well. So it becomes even more difficult, to make sure that we are not just getting swayed away and getting carried away. So I guess that's what the difficult part is. You need to be on the top, and also the fact that you don't get carried away by listening to all sorts of buzz in the market.
And no, absolutely, as well put, Nimish. Thanks very much for that. So we'll keep an eye out on those stocks as always. So that's D Street Chatter. Mitesh is with us with what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, market's back in the green, 25 points higher. So moving on, but likely, as you said, to remain a little dull, remain a little consolidatory fashion, right?
Yeah, Prashant, I think, the good thing is that declines are being bought into. So as I said, this looks like a part of consolidation, and therefore I think, as long as declines are getting bought into, we are not breaking below. We just find some base at new levels and then eventually start making higher highs. So good moment for me. And on the stock side, PSU Bank, Bank of Baroda, I think comes as a call for BTST. That's the stock, which is trading in the day's high. BTST here with a stop at about 217 and targets of 225 for tomorrow can be looked at. And Biocon, after a long time, is giving a reversal, a strong one. That's a BTST with a stop at 246 for 255 as the target for tomorrow.
Okay, all right, Mitesh, thanks very much for that. So that's basically what Mitesh wants you to do as we stand right now. Now, the Ola Electric IPO is all set to come through. They're going to file a DRHP. Parishad, of course, reported this. The valuation ask is $7 billion. Can the Ola Electric IPO do something for the listed two-wheeler stocks, which also have their own electric vehicle businesses? TVS Motors is something which is doing very well. Sonia is here to tell us the connection between TVS Motors and, of course, Ola Electric and its IPO. Sonia, take it away.
Well, thanks a lot for that. It has been a very strong run for TVS Motor. The stock is up over 80% in 2023 alone and has hit a fresh 52-week high. Now, the story is that TVS Motor is fast catching up to the #1 player, Ola Electric, in the two-wheeler space. And now with Ola Electric all set to file its DRHP on the 20th of December, we map the journey of TVS Motor as well. TVS Motor has become very successful because of the iQube e-scooter, which has done very well. And both in terms of volume and market share, TVS Motor has gained compared to Ola in the last 1 year. So let's take a look at the numbers. In the last 1 year, TVS Motor has now become the clear #2 player in the electric two-wheeler market, surpassing the likes of Ampere and Okinawa, and is now growing faster than the #1 player. The growth rate of TVS Motor has been in excess of 40% in volumes year-to-date compared to FY23 and year-to-date FY24, while Ola Electric has seen a 17% growth rate. Even if you map the market share gains, TVS Motor has exceeded that of Ola Electric. But the big question is, can TVS Motor beat Ola Electric to become the #1 player in the near future? Now, Ola is very ambitious. It has plans to sell 1 million scooters a year and become EBITDA positive by 2025. But TVS Motor is not too far behind either. It's ramping up its production aggressively. It's ramped up its production to 25,000 e-scooters a month and ramping up its sales outlets to 900 in the next 12 months. It's also made a slew of investments in the e-mobility space, like acquiring controlling stake in 2 Swiss e-bike companies for $120 million, and it's recently acquired Norton Motorcycles for $100 million, where it plans to launch a motorcycle, electric motorcycle in the premium segment. So TVS is gearing up to create a complete suite of products within the electric mobility space. The iQube has also been growing steadily and now hit a peak of 20,000 units in the month of May 2023. The only problem with TVS Motor is valuations. Valuations are looking stretched compared to peers in this space. So TVS is trading at 30 times forward PE compared to Bajaj and Hero, which are trading at 19 times and 16 times respectively. Back to you.
Okay, all right. Thanks a lot for that, Sonia. You know, there's another stock, TVS Motors. TVS Holdings is an indirect way of playing TVS Motors. And dare I say, I think that has been actually a relative outperformer as well, because that stock, as we speak, is at around 7,700, 7,600, I think so. So let's pull up. It's the erstwhile Sundaram Clayton. You know, that was a stock that was listed earlier. Then the name has changed to TVS Holdings. So at some point of time, I think we should get that one as well. It has a majority stake. Yes, that's the one that I'm talking about. Running behind TVS Motors, there's been a couple of instruments that have been issued out there. There's a demerger that's taken place. So that as well has been a big outperformer, actually. And I think it's relatively outperformed TVS Motors as well. Mayuresh Joshi joins us. Hi, Mayuresh. TVS Motors, I recall the stock at maybe a third of what it is today. And people are wondering whether or not the margins will improve. The growth has been splendid. Now you've got this kicker coming in terms of, the IPO. What's your view on the stock at current valuations? Valuation-wise, it's always been expensive, but the street still loves it.
Afternoon, Nigel. Yes, that's been the case. And I think the numbers are doing the talking for TVS Motors. As Sonia rightfully explained, it's not just the iQube numbers. I think the general portfolio that TVS has got has been outperforming month on month, quarter on quarter, and year on year as well. So ever since the COVID crisis has got over, the expectations that the street has and the kind of delivery that TVS Motors has given, both in terms of the product mix, in terms of realizations, the cost optimization program that TVS Motor has been running over the past few years is clearly bearing fruit. And now you're seeing EBITDA margins in excess of 10%. I still recall, Nigel, that years back we used to all argue whether TVS will reach that aspirational figure of 10% from the 7-8% margins that they used to post. But now with the 10% mark being consistently achieved, the kind of value adds that they're coming in, both through iQube, the presence in terms of more distribution dealer network, and even the export markets like Vietnam that they have started exploring. Obviously, valuations are way above mean levels. And therefore, anybody holding the stock can continue enjoying the ride and the momentum that the stock has to give. As a clear disclaimer, we continue holding the stock into our global.
Mayuresh, do stay on. All eyes are going to be on the two-day FOMC meeting, which began yesterday. Responding to the CNBC Fed survey, Federal Reserve is likely to begin its rate-cutting cycle next year. CNBC's Steve Leisman.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, the markets, it's evident out there. Buy the dip and participate on the upside. You're up close to around 160 points on the Nifty itself from the low point of the day. And the Nifty bank that's playing out weekly expiry, that's managed to sneak its way back into the green. So that as well should come up for you on the screen. Mayuresh Joshi is still with us. Mayuresh, I want to ask you about Vedanta because now the street believes that there could be some kind of a refinancing plan that could come up. Now, Vedanta Resources has close to around $1 billion of debt that it either has to repay or refinance by January. That's 2024. So we're a month or so away. So they had to come up with something. What's your view at around 254? Just a short while back, people were very, very scared because there's a downgrade in terms of their ratings out there. But Mr. Anil Agarwal said, I'm going to definitely make sure that this happens. For now, the street is happy because, the stock price is close to 15% higher from that time at around 210, 220. Your view?
So, Nigel, I clearly remember your interaction with Anil Agarwal. And therefore, I think the kind of expectations that the street has, that almost $1 billion of debt will go in for refinancing at the holding company level. But one must also understand there is almost $3 billion worth of debt maturing in FY25, including almost $2 billion in terms of bonds. So to that case, the expectations in terms of the sole purpose of debt reduction is something that Vedanta has to do as a earmarking exercise. On top of that, the kind of cash reserve that have got used out from Hinzing's balance sheet, dividend payouts will be at an absolute minimal in the coming year. So the street is excited to that extent that $1 billion of debt will go in for refinancing. But also what they are earmarking is almost $150 to $200 million in terms of growth capex, largely for its oil and gas business. Now, what the global commodity market is going through and the recovery in China only expected by the second or third quarter of the next calendar year, LME prices expected to remain muted. And again, I think the geopolitical uncertainties, all that will probably boil down to operating leverage not getting paid out on the balance sheet. So at this point of time, yes, the street is sharing the news that is expected to come out, but we largely maintain a neutral view for all these factors which can act as headwinds.
Got it. On the GMR Infra, Mayuresh, any thoughts? These are, it's a play on a real booming sector, which is aviation, 100%. Just it's done well, though, and very, very quickly in the last 3-4 sessions now. I don't know if you look at valuations, etc. on this.
So, afternoon, Prashant. So I think the stock is probably placed in a sector which is expected to do well. Having said that, it is the second largest player in terms of airport infrastructure operators across the globe. The expectations of a lot of fleet additions expected, Air India, Indigo, Akasa, as far as domestic airlines is concerned, and a lot more in terms of the Southeast Asian airlines as well. They manage close to 9 odd airports. Their strategy is very, very clear going forward. Create platforms and ensure that these platforms on the non-aero business part, whether it's cargo, whether it's duty-free, whether it's the food business, is expected to grow along with the airport business that they're having. The other deleveraging aspect is also the huge land bank that they probably have. And therefore, I think the 2,500 acres of land at some point, either on a co-development or and monetization aspect, can deleverage the balance sheet, because balance sheet on a net debt to EBITDA level at 13 odd times, and the promoter pledge also relatively high. So there are fundamental factors which work against the stock. However, the expectations in terms of more operating leverage getting played through, because the recent ITA report is probably suggesting that there might be 40 million airline miles that can probably come through. Almost 4.7 billion passengers expected to fly in FY24, and with crude prices expected to stay lower, that number can even go higher. So I think there are some pluses, some minuses. So the momentum can very well continue on this one. No fundamental research that you're probably carrying.
Okay, Mayuresh, we'll leave the conversation here for now. Markets closing in the green. So after losing 0.5% yesterday, the Nifty has managed to recover close to about 180 points from the day's low to end very close to 20,950. Not only was 20,900 conquered today, we're actually getting close to 20,950, and markets picked up significant amount of momentum in the second half of the trading session. So up 30 points on the Nifty, the Sensex up 70 points. Look at the mid-cap index, a nearly 1% rally on that. Small cap index also close to ending with a gain of 1%. The advanced decline ratio also quite strong. The Nifty bank ends in the green, but the last push which you saw in the large cap names was missing in the banking names. So the Nifty bank off from the session lows, but ending flat.
I just take a look at stocks in the broader markets, Rima. That party is well and truly alive. Tanla Platforms 18%. Gallant Metal for, I don't know what's the piece of news coming out there, but that stock as well was up close to 14% on large volumes. You had VIP, one of the big underperformers. Yesterday it was time for Safari. VIP said, let's us also pack our bags and start moving up. So it seems the bulls have suddenly got interested out there. You had Blue Jet Healthcare, another stock that was up and about. And Karnataka Bank, we've already seen a big re-rating. Well, the stock continues to move up and volumes are very, very high. What a good trading session actually for the bulls, because today it actually gave you that entry opportunity. For the last many trading sessions, what's been happening is you start off in the green and from there, not able to build onto that. But today the bulls will say that this is a far better trading session because they got an entry opportunity. Prashant.
Absolutely. And, we just need Fed Chair Powell to, I guess, behave himself later today. Just kind of do...
just be good.
Just be good. Well, by the way, the Nifty, Nimish points out the Nifty, the public sector index, right? That is the one which did very well. And I think, and I'm looking at all the constituents, the Nifty PSE index ends 2.5% higher at close. If you can pull that up. But I think there is a outsized impact from REC and PFC because it's not as if everything here is done well. So we've got the entire constituents of the PSE index up. REC and PFC, as you guys said, 8%. There was HPCL, which was up 4.5%. NMDC was up 4.5%. And of course, I think NTPC would also have a large weight. But there were lots of names which were flattish as well. But there were these 3%, 4%, and of course, 8-9% gainers coming through in REC and PFC. So the PSU space, banks and otherwise, continue to rally ahead, and they continue to be the leader of whatever is doing well on days like today. Well, that's the market for you. 25 points higher by close. 20,932 is where we finally leave things at on the index. Well, it's a wrap on this edition of the Closing Bell from all of us here. The entire team, thanks very much for staying with us. But don't go anywhere. Markets Forward will pick up on all the action in just a bit.
CNBC-TV18 embarking on a quarter